From This Week in Trucking, this is Hot Right Now, and I'm Amy. Tax season can feel like a second job for owner-operators. It's complicated. Every tax deduction you qualify for is important because it saves you money. The IRS has a lot of rules for trucking business owners. But the reality is, most small carriers don't know these rules and end up leaving money on the table. Today, we'll explore these deductions and hopefully save you some money on taxes. But before we get into the details, don't forget to subscribe so you never miss an update. Here are 10 deductions every owner-operator should know about in 2025. Number 1, meals on the road. When you're away from home, you don't have to keep every meal receipt. The IRS gives truckers a daily per diem meal rate that you can deduct. It's simple, but it adds up fast. And speaking of daily costs, here's number 2. Fuels and fluids. Diesel, DEF, oil, and other fluids are fully deductible. For most carriers, this is the single largest write-off on the books. In number 3, we have tolls and parking. Bridge tolls, turnpike fees, and even overnight parking at rest stops or rest areas are deductible. If you're paying to keep rolling or for parking, it's deductible. And when you can't park the truck, here's number 4, lodging. Hotel stays while you're out on the road for work are deductible. Just keep the receipts. Now let's move on to keeping the truck running. So in number 5, we have maintenance and repairs. From tires to oil changes, repairs and upkeep are fully deductible. If it keeps you on the road, it's a business expense. And while you're writing down repair costs, don't forget the truck itself. At number 6, we have depreciation and lease interest. If you own your own truck, you can deduct its value over time. If you lease or have a loan, the interest portion of the payment is deductible too. Moving on to number 7, we have insurance premiums. Liability, cargo, bobtail, and occupational accidents. All those policies you carry for your truck and your business are deductible. Moving to number 8, licensing and regulatory fees. IRP plates, IFTA, UCR, and permits, all those fees and registrations you pay to operate are fully deductible. And for when you bring in outside help, we move on to number 9, professional services. Accountants, lawyers, and even tax prep fees are deductible if they're tied to your trucking business. Finally, let's not forget about the tools that keep you running in today's industry. At number 10, we have communications and training. Cell phones, GPS, data plans, ELD subscriptions, CDL endorsements, safety courses, they all qualify. And last but not least, state-specific deductions. A lot of states have deductions for truckers, so check the specific state you're filing in and take advantage of those. These change often, so it's worth checking every year. Now here's an important part most carriers miss. Even if you qualify for all these deductions, you can lose them if you don't keep proper records. In a 2023 tax court case, 𝗙𝗢𝗡 Commissioner, a truck driver's receipts and logs were destroyed. And because he could not back his expenses, the IRS denied all of his deductions. Here's the good news. Even if you lose your original receipts, the IRS does let you reconstruct records. That means you can use bank and credit card statements, settlement reports, and even trip sheets to rebuild the picture of what you spent. It's not perfect, but it's better than showing up empty-handed. And the best way to avoid all this, put a record-keeping system in place. That can be as simple as scanning or snapping pictures of receipts on your phone, using bookkeeping apps that are designed for truckers, or setting aside a time each week to file and organize all your expenses. The bottom line is, no receipts, no logs equals no write-offs. All it takes is a little consistency. Here's the big takeaway. The IRS expects owner-operators to keep track of every business expense. If you're not careful, you're probably missing out on hundreds, if not thousands of dollars on deductions every year. The best move? Keep detailed records and work with a tax professional that understands trucking. A general accountant might not know all the specifics, but a specialist will. And one more tip, stay proactive. Waiting until tax season to figure all this out usually means overpaying. If you set aside a time, weekly or even monthly, to track your deductions, you'll be in a much stronger position. If you want more quick updates like this, sign up for This Week in Trucking's free newsletter. We break down the best cities to pick up loads by equipment type, plus interviews with carriers sharing their real cost per mile and profits. Make sure to click the link in the description of this video. And let me know in the comments which of these deductions you already use or which one surprised you. Don't forget to subscribe and drive safe. If it keeps you on the road, it's a business. If you own your truck if you own your truck. Moving to number 8, licensing and regulatory fees. Very